So, with that being said, welcome everybody back to the second part of 2024. What we're looking for on the charts. Now, obviously, we've had a huge rip. This is something I talked about in the last video. I talked about the pullback into roughly October time period is when they essentially, quote unquote, officially paused. And I said them, I've talked about this all last year that once they officially pause, we will rally. And quite the rally we've had going into the last back half of the year, but we didn't hit all-time highs. We were just like 30 points away from all-time highs, and we started selling off this week, which is very, very interesting, as I do believe we will start getting close to a rate cut, but I don't believe that will happen till March. We couldn't get emergency rate cuts. It really depends on what happens on this earnings cycle, and if I think it's going to happen, it needs to happen now or in June on Q2. Essentially, Q1 reported earnings would have to happen, or what's going to happen is I think it's going to be delayed until after elections. So we probably won't see it maybe till February, March of 2025. Again, election years are normally very bullish years. So we will have to see how this is. This is why I talk about we have to watch our baseline. We know it's normally, there's a normal, pretty heavy pullback in February, March time period, and in around the October period. So those are the two big periods we are watching. But again, you have elections, so I'm not expecting a heavy pullback in October. And so if it's going to happen, it would have to happen now at the beginning half of this year, or else I think that can will be kicked again down the road until 2025. And so I'm trying to prepare for that. But again, if things get so bad, the Fed will start cutting, and you don't know what can happen from that. You don't know what's going to happen in 2024. So this is why we don't like to project too far out. We just like to keep within the next 3 months. What is our schedule? Kind of look at the next 3 months, what is possible, and then roughly, essentially advise a lot of things around what's currently going on in the earnings cycle, and understand what your earnings cycles are. There's a pump typically going into an earnings cycle. Then after reports, you could get a pump or two after that week, and then you get a pullback. You get a natural pullback of that stock for about 3 to 4 weeks. And then it could, right, depending on the news, it could sell off pretty heavy. It could barely sell off. Just all depends. And so, again, industry leaders, the first 4 weeks of earnings are what are important. Essentially, the market doesn't care after your industry leaders have reported. The rest of the things there's other earnings that do give you a good pulse on the market, like Lowe's and Home Depot and those kind of things. So you have to ultimately pay attention to those kind of things. But ultimately, again, those first couple weeks of earnings are the most significant and will dictate the direction of the market from that point. Again, all the other ones are just going to give you a pulse and what will essentially show you what's going to happen in essentially the future of the economy. Again, like with Home Depot and FedEx and those kind of, again, pulse of the markets will really help with that. So again, we will see if we do break all-time highs. Again, it's an election year, so if we do start pumping and do break up, that would be a positive sign. We could break all-time highs, maybe start going up. I know some economists are saying that. I would go with that sentiment if we don't get a cut. Obviously, it's an election year. My stance is if we can't sell off, I'm going to be buying the dip either way in March because of that fact. That's my baseline. I know it naturally sells off. Will there be a cut around that time period? Right. And so I think monetary policy in March is on the 20th. So the back half of March will really dictate, do we price in a recession or not? If we do not, and again, fine and dandy going in election, again, nobody wants to look bad going into election. I can see that can being kicked, but ultimately I'll be buying that dip. Really watching the 20th of March to see if there is a cut, right? There can be emergency rate cuts if something major happens. There's always the black swan event can occur. It's very rare it occurs, so you can't always count on that. So you look for essentially your normal cycles and what happens. So you're just kind of hoping everything kind of plays out around that time period, and then we see what happens and go from there. So with that being said, we'll see what happens here on this natural pullback. I do expect maybe we could drop down to the 4,500 here, roughly around that 4,600 mark, and then attempt to try to retest If we don't break it, that's concerning. Again, I can see a natural pullback because we've had this massive rip up. At least pull back down to the 4,600. Again, I wouldn't be surprised if we chop. I wouldn't be surprised if we get a lot of chop this year, to be honest. But we will have to watch and see. But again, this is natural. This massive rip off of a official quote unquote pause until we get rate cuts, and normally that rate cuts last. That run up lasts about 3 to 4 months before we get our first rate cut. Again, everything kind of plays out around March. So again, as soon as you hear on the wire of a rate cut, there's a strong possibility of a pricing of a recession. People have already talked about a 30% decrease in what is currently going on and coming into this year. So, and the fact that we've looked very weak going aside from the past 2 months, we've kind of ran up. Now things are starting to look weak actually going into earnings. So again, going into earnings, I wouldn't be surprised if we do get a bump up over the next 2 weeks before things actually start reporting. And then once we get some potentially bad earnings, that might start selling us off. So you have to see how, again, how companies are doing on earnings and how they do on expectations. Again, a lot of these big industry leaders are barely hitting expectations. Essentially, all you have to do is show up for expectations. And if you can't even do that, then, things start selling off pretty bad. And so, again, it's all that baseline. Ultimately, understand over the overall sentiment, things are very, very bad. So, again, we are watching that 47.93 for a retest over the next 2 weeks for just a natural pull up. But again, if we start reporting any news, this is the time for news. If you've not noticed to this point, something I've been talking about and highlighting, they wait for big news to drop during earnings. In between earnings, they try to filter it. They try to stop any big news from coming out until earnings when they have to report it. Again, at some point, something will drop. We don't know when. When it does, you just have to be prepared. That's all. And again, you don't want to be buying at all-time highs when you know that there is going to be a point where price in a recession. So you just buy on the normal dip, right? What is the normal dip? We will buy that dip. Hopefully by then, right, we'll get a price cut, and then that will be the dip that will also include a recession. So we'll see here. But ultimately, again, this kind of watching that 45, 40 level, and also watching this 4,400 level. But again, ultimately, this 4,100 level is really the level that we want to watch. If it does break that, I do believe we will go to a new low that we saw back in 2023. Was it 2022 was our lowest, just below 3,500, I believe it was. So this was our low way down here at 34.91. So again, if you watch this is when they officially paused, and that was our rally, 3-month rally, just rip. This is normal. This is what you can expect on an official pause. Now, barely missed all-time highs. We have to watch and see how this plays out. I would expect at least a retest going over the next 2 weeks. Once we started getting earnings, if things are good, maybe we can rip to all-time high. But if they are bad, like we've seen a lot of pencil whipping doing, and actual real numbers come out, we could start pricing in a recession. So ultimately, when Feds start cutting, we don't know when that's going to be. That's when the recession occurs. So again, but if we do break that 4,100 level, that's the very key level we are watching. Again, I think we could maybe, I don't know how low, if we will hit a new low. Our new low may only be down to the 38. Trying to get, if they are talking about, they're talking about a 32% correction, which from right now would roughly be around 3,200. If that's the case, so we would hit a new low if that is correct. If we got a 32% correction, pricing in a recession could be a possibility. I mean, we don't know. Again, we've had a lot of quote unquote rolling recessions, as Kathy Woods has stated. I think we've seen rolling recessions occurring. I think we're actually in a depression at this point, even though verbiage and definitions get changed all the time. But it could be a strong possibility. But our key level, especially on the monthly to watch, is that 4,100. I think if we do break that, there's a strong possibility we could see a newer low. I definitely want to be buying heavy if we break that level. But again, we have to see. We have to see the whole timing and when we start cutting. But that's what we're watching there. As far as Bitcoin is concerned, again, I think this is a buy the rumor, sell the news event on the spot ETF. Will we get back to the 69 level, the 70 level? It's really hard to tell. If we don't get approval, that could be a pull. We haven't had a pullback since this parabolic move. That is a flag that's on this daily, so it looks like this is all set up for this week on the spot ETF. If it does get approved, this thing could really start ripping. But I don't know how much more. It's already ripped quite a bit. If you take it from the bottom, you have to understand there are pullbacks, and this thing is not just going to go vertical. It's gone up. Bitcoin has gone up 165% already from the low of 2023, right? So you have to understand that for this thing to keep just magically going up without pulling back, it'll pull back at some point, right? You have to understand right before the halving, there's normally a pullback before the real true bull market occurs. This is what I've been talking about. There is one more pullback before the real bull market will come back, right? Like you have to price in a recession before the real bull market comes back. And I do believe, again, the SEC has a lot of ammunition against crypto. They could drop a lot of different things that could really essentially be a punch in the gut for crypto. So you have to be very careful when it comes to that aspect. So watching that, I'm going to highlight gold here for a second because we're at a very critical level. If this does break, there could be a lot of fear coming in this thing. This thing's been running up, although it looks like an ascending wedge. And if you know anything about ascending wedges, it normally sells off. But again, there's a lot of worries and concerns. A lot of people are buying gold. A lot of institutions are buying gold because of the worries and concerns. You have to take a look at their actions that they're doing. Like Bitcoin's not going anywhere. They are doing stuff. We are seeing those actions. Again, you are seeing the actions of people buying gold. People are concerned. They're hedging against the current system, right? Because we don't know what's going to happen. We see this on every cycle. Gold goes up, crypto goes up because of the worries and concerns. Then they play out and they sell off heavily. And then just before a big cycle, right? We have to understand how the cycles work and go from there. So if this thing does break out again, gold and silver are heavily manipulated, so I'm not quite sure that will happen, but nonetheless they look like they're about ready to break out, so we'll see how that goes. Palantir, again, another big one I like to watch moving forward. Let's actually jump down to the daily here, looking hopefully for a pullback to 14. Again, there's been a lot of downgrades. They've already started downgrading Palantir. They've already started downgrading Apple. And earnings haven't even started yet. Like, why are they downgrading these particular institutions? We know Apple's been doing horribly bad, but it's been the safe haven. But now it's starting to sell off heavily. These are things you need to pay attention to, especially the beginning of the year where you're going into an earnings cycle. They're already doing these things. They're already anticipating something bad to happen in March for rate cuts to start happening to price in a recession. Again, the only thing that is making me unsure if we're going to price in a recession in March is the fact that it's an election year. That is normally bullish. So we will continue to watch and we'll continue to see. But watching again the key level 14, watching the 970 and also watching the 638. Again, that would be ideal if we could come down here because I would buy tons of shares. But I don't know if we'll get down that far. I could at least hopefully see us maybe getting this back in this 10 mark for a little bit. It really just depends on how this plays out. So again, I don't know if we're going to make new lows. If we do make new lows, we need a lot to generate fear. Again, the market is at that very extreme greed right now. And this first week, we've actually gotten out of extreme greed back to just greed, and shows you how fast that can change. So again, beginning of the year, all that hype has kind of died out. So kind of watching this particular pullback. So from that, just take a quick look at Apple. Again, Apple been selling off quite heavily. So Apple's been selling off quite heavily, kind of looking for that pullback to 173. And then also my next level will be 153 if we do pull back further than that. But the ceiling to break ultimately is that roughly around that 200. We'll see if we can retest this one last time going into earnings before selling off even further. But that is something we need to watch. A lot of that is going to be driven by AI, so pay attention to that. This particular one, I've talked about this one a little bit last year. I want to kind of potentially buy some of this going forward. Anything that has AI or crypto. Again, PayPal had put in um, essentially they have a patent on AI development that they haven't quite talked about just yet. But I know a lot of the real big ones like UPST and SoFi, they also have an AI piece to it as well. And they have crypto on top of it. So I think PayPal will be a big leader. And so if it has one or two of both of those things are things that I really want to buy into over the next couple months, especially around March. And if there's a March, there should be a normal March low around there anyway. But again, like I said, that depending on the rate cut, could be a lot deeper. We don't know just yet. But so that's what we're aiming for. So really kind of watching this one as well. I do want to play into this one since it's already sold off heavily. I think it's one of the probably the best stocks as of right now. Moving forward, going over the next couple of years. Again, if you're, I like to swing trade a lot. And so I think this would be a good one, especially going into the cycle, to really be watching moving forward. So that's why I wanted to bring it up. And then we also have BA as usual. Actually started pulling back quite heavily. We'll see if it'll start buttering some of these levels like it did back here. It chopped forever, so these should have actually held, but it just completely buttered. We're starting to see that with some bad news that came out on Boeing, especially over the weekend. This thing might actually gap down back under this over the 234. But the next level is essentially that 220, and then kind of watching that 119. Again, this one is essentially almost backed by the government, so it really can't fail. So any major dips like this one could be worth buying. I don't like Boeing, period. I think it's just bad business model. But again, it's backed by the government, so it will run. So like a lot of people do like to play this. I like to play it with shares. I don't like to play with options because it just bounces around too much. It doesn't make a lot of sense on how it moves. But if you're playing in shares on heavy sell-offs, that could be beneficial. So watching for this thing to potentially start selling off pretty heavy as well. Now, JPM, same thing. Past 3 months, it's just been parabolic. We'll see how earnings does. They're expecting, they're trying to price in a lot. So a 6-point move on this is could be some bad news from JPM. So really want to see what happens on Friday. That's quite interesting that we saw the 6-point move on JPM coming into this week. So yeah, we'll definitely watch this, especially after this parabolic move. Again, some of the key levels here to watch is 155. Again, if we break out from here, it's all-time highs. So let me actually go to the monthly here, max monthly here. We are at all-time highs. Or we hit all-time highs already with JPM. So actually, won't be surprised if we start selling off quite heavily. Get another one of these major pullbacks coming up. Could be a strong possibility. So just watching that to see what happens. Again, these unrealized losses, I think, are something that's not just going to come out, but who knows? Who knows what event could occur? But at once JPM does report, again, you're going to have a natural pullback. So we'll just see how much of a pullback actually happens there. But yes, we've hit all-time highs. Some of these have hit all-time highs, these individual stocks. SPX hasn't quite got there. Like I said, it died off just before it hit it. So we'll continue to watch and see how that does play out moving forward. But this is the second half of the video. Again, this analysis here wasn't very long. I didn't want to tie this all into 1 hour video. That could be long. So again, that's why I segmented both of these sections because I know some people care about just overall sentiment of the market. Some people like to listen to that. Some people just want essentially the technicals almost currently going on. So that's why I broke this off into 2 halves. I don't know if it's something I will do forward. Drop a like, comment what you think is the best thing to do. I like doing both. Obviously, that's why I do them. But if you would like them both to be separated, that we can get the charts quicker and just get to the charts. And then I also have the sentiment as well. You can get it to it on your own time. So with all that being said, I appreciate it. Go ahead and drop a thumbs up. And until next time, I'll see you guys later.